Hey guys, hey, the GammaEdge here coming at you with a post-market recap for August 7th, 2025. So right today, pretty aggressive sell-off. Obviously, we're going to get in our pre-market levels. We're going to get in our intraday tools kind of telling us how we were able to successfully navigate this price action. Things to note is that on multiple time frames, we knew that 6,400 was a key kind of upside level in the SPX. We also knew that 70 and 80, these were key levels, hence why I have these marked on the chart. And then obviously our transition zones, which ended up playing a very big factor in the session today. So with that, again, as I just noted, going to go through pre-market prep, how we got those levels, and then we are going to go into our intraday tools. So as always, it always starts with our pre-market prep. We do in-depth SPX prep in the morning. I'm not going to go through it extensively because as we have linked here, we did a pre-market live session on YouTube. We do this pretty much every day, 20, 30 minutes where we go through that entire thing. So if you want to see what that looks like, feel free to find this link either in the Discord or go to our YouTube page. Right, but getting into our ZDT complex, a couple of things that we wanted to note. First off, we are opening right around this 60-80 level, looking at the distribution of speculation, which we define as open interest in the pre-market session. We noted that 80 and 70 were both key strikes to the upside, along with 6,400. So the thought was, getting above 80, we could get up to 6,400, but that's likely kind of the high point of the session. The other thing that we noted too is noting that we were gapping up very high into the distribution for the day. Up here, kind of a good distance from the transition. So the thing is the rubber band already starting the session pretty stretched. Not to mention we were entering what we called thin air, just given the lack of put speculation up in the structure. So those closing of puts, kind of that fear component is not going to really, that component is not really there to help us drive us higher. So we're going to need to see a lot of volume come into the market and evidence of speculation continuing to push us higher. Because if not, then folks are going to monetize their positions and it's going to be hard making upward progress. And so, right, just going through the key levels again real quick. So 80, 70, just note the speculation at those levels, hence why I had those marked on my chart. And then we have our transition zones, key ones being the drunken sailor range from 60.35 down to 60.10. And then we had the intermediate DEX transition zone from 63.45 down to 63.25. Right, again, just recapping that action for you. Again, a lot of kind of digestion to start the session around those key 60, 70 levels. Obviously, had a breakdown from there, breakdown the entire rest of the session. You can see, kind of as we were moving lower systematically, it felt like, just kind of a level move in terms of, break, retest of the transition zones here, retest there, going all the way to the bottom of the drunken sailor range. So pretty textbook session. And I mean, to the penny, pretty much finding support right at the bottom of our transition zone. But in addition to that, aside from our key levels, something that is very critical, especially today, like if you were really wanting to buy any dip, this chart may have helped you if you weren't looking at it. So what this is SPX 0DT volume. Every 5 minutes, we are aggregating that volume, finding the distribution, the midpoint of that distribution, which is a centroid, and we're plotting that. So plot, 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 plot. We plot those throughout the session so we can understand what the trend of speculation is on the day. So we can see throughout today, call speculation, lower all day. Put speculation, lower to sideways all day. So this tells us a couple things. One, when we see material speculation higher, when we see price wanting to move higher, generally that's led by call speculation going like this, not like it going like this. So really no material opening of calls. Remember, pre-market, we were saying how given where we were opening in the structure, we wanted to see a ramp higher in calls that would kind of give us confidence that we were going to move into 6,400. Obviously, didn't get that. So all session, right, just moving lower. The other thing, looking at the put side, we could see that moving sideways to lower as well. So that kind of was helpful in giving us targets to the downside, especially within the context of our drunken sailor ranges and all that good stuff. As we were starting to get down into kind of these levels down in here, these puts that would have been open, we take this as opening up puts, just given their kind of downward nature, speculation, out of the money speculation, right? Starting to get to where those were moving from out of the money to at the money to in the money. And so kind of natural monetization zones in this area. So, with the confluence of the bottom, our drunken sailor range kind of made a lot of sense why this was kind of the lower cap on the market for the session. But really the takeaway from this chart is just the downward sloping of the call centroids throughout the day. So if you were dying to buy the dip, unfortunately, you probably got your hand slapped a couple times today. Further, the other intraday tool that we'd like to use is our market trend model, right? Looking at the filtered tick, granted, was not like super aggressive to the downside today by any means. Compare this to the large buying day we had one, two, three sessions ago. Order of magnitude smaller. However, the general direction was still lower, and especially after we had 2 days of rally. Ultimately, that was a failed rally so far. But yeah, just another kind of intraday tool that helps keep you on the right side of the trade. Right, and lastly, what I find important, I didn't hit on this before, is this is what an intraday snapshot of our volume tool looks like. So you can see kind of the utility of having how we use this intraday, right? Because we just looked at the end of the day snapshot, which is important for watching game tape. Professional athletes watch game tape, so why shouldn't we watch game tape? But here's what this looks like on an intraday basis. So we could see at 12:05 the centroids were moving aggressively lower on the call side. On the put side, they were moving sideways to lower as well. And then these dashed lines are basically a forward projection of where we think those centroids are headed, right? This is all historical data. This is all our projection of forward data based off of what we know. All things equal, this is the likely path of price because price follows the centroids, which are a representation of transactions. So again, just wanting to show you what that intraday tool looks like. And so with that, that's all I got for you guys tonight, right? We reviewed the key levels, reviewed our intraday tools, then understood kind of the context of price action within those tools. So with that, appreciate the time, and we'll see you all tomorrow. Thanks. Bye.